Welcome everybody to our marquee debate here. We're talking about China today. I'm extremely excited. I hope everyone else is here too. I think for this crowd, I don't think there's any bigger question than what happens with China in the next few years. The world's number two user of oil, the world's number one user of copper, obviously a huge player in gold. I was just reading today that Chinese New Year gold sales are up 61% this year compared to what they were last year. So wherever you are in this crowd, no matter what it is, what happens with China is a huge deal. And it should be a great fight today. We have on my right is Chang, speaker and writer. He is the author of, sorry, 1 second. I'm having my own technical problems. The author of The Coming Collapse of China, a book that warns of financial and political demise. He reiterated his case against China in a foreign policy article from December of last year, in which he made 3 key points. China, contrary to what people think, is actually regressing in terms of reforms. The multi-decade boom of its trade partners is ending. That actually ended in 2008. And China, which you think of as this huge population, growing country, is actually turning into, the demographics are turning negative. And it should be noted that Chang's commentaries earned the official rebuke of the government and media sources in China. There was actually a People's Daily story titled, "It is the China naysayers who are doomed to fail," and it took direct aim at Chang. And so I think he should probably take that as high praise. Making the bullish case on China is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors. Has a mutual fund family of 13 funds, led the way in emerging market and resource investing for mutual funds. According to the last announcement, at the end of Q3 2011, had $2.45 billion in assets under management. If you saw Frank's presentation yesterday, he created a great picture of why China is going to boom for a long time. Infrastructure investment, we're just scratching the surface of that, heading into the interior, lots of stuff for people to be excited about. Real quick overview of the rules. I'm going to give each of the gentlemen 5 minutes to state an opening position, and then I'm going to ask a couple questions, at which point they'll have 4.5 minutes to answer and 4.5 minutes for rebuttal. And then hopefully we'll get a couple questions from the crowd, and you could submit them via Twitter using the hashtag VRICChina. And send those in. I'm looking forward to hearing them. And all right, so should be good. So Gordon, if you'd like to start.
He's the one who's supposed
to. All right.
Let the bear start.
Either one, 5 minutes.
When my wife and I moved to Shanghai in 1996, we saw those gleaming skyscrapers in the great cities of China. We were mesmerized. And we thought then what Frank thinks now, that China is a wonder to behold. Yet as we stayed there, we saw that as we traveled around the country and as we lived with the people, we saw the vulnerabilities that were apparent in the system. Yes, China has great potential, but we also have to remember that we need to get beyond generalities and theories and look at the facts. And the facts right now are that the Chinese economy is slowing, and increasingly it appears that this is not temporary. There are 3 reasons why China grew during its 35 years of the reform era, but these reasons either no longer exist or are disappearing fast. First, Deng Xiaoping's period of reform is over. The current leaders have turned their back on it, and among other things, they are shutting out foreign investors as well as domestic private entrepreneurs. Second, China is no longer benefiting from its period of a benign period in history when countries wanted to integrate China into the international system and therefore were tolerant of its mercantilist policies. Today, many countries want to protect themselves from Chinese imports. A year ago, it would have been inconceivable that Pacific Basin nations would start a major trade round without China. But that is precisely what happened in November when President Obama announced his Trans-Pacific Partnership negotiations. And third, and perhaps most fundamentally, China grew in large part because of its demographic dividend, this enormous bulge in the workforce. But now that has turned into a demographic tax. The workforce in a year or two will peak and then start to shrink, and the country's population overall will begin to decline in perhaps as few as 8 years. So China is entering a new supercycle, and this time the supercycle is down. It is in this adverse context, not in the favorable one of the last 3 decades, that Chinese leaders will have to act. They will no longer be propelled by these global trends. In order to succeed going forward, they will have to succeed in spite of them. In this period, going forward, China will have to rebalance its economy. The country has already built all of its ghost cities and bridges to nowhere, so investment cannot drive growth in the long term. Yes, infrastructure has created growth for China during the reform era, but now it has become a burden on the economy. China is now cutting back because many of these projects are unviable. China's debt to GDP ratio is at least as bad as America's and is perhaps as much as 160%. As one Chinese economist said a couple days ago, every province is Greece. Moreover, exports, which were once really driving the Chinese economic miracle, are faltering because of problems in the European Union, China's largest trading partner. So the only thing that can create growth at this point really is personal consumption. The Chinese economy, however, is the most unbalanced in the world, where consumption contributes to less than 34% of gross domestic product. And while leaders talk about increasing consumption, the role of consumption has continued to decline, especially over the last 5 years. The truth is that low consumption is the inevitable result of China's growth model, not some remediable feature of it. And consumption's role will not grow significantly until Beijing takes risky steps to change that model. No one in the Chinese capital, however, is willing to implement the decisions that are necessary to put the economy on a sustainable basis. Everybody knows what to do, they're just not doing it. Why? Because China is in the middle of an historic political transition that could last for years. Until the new leaders get settled in, no one is going to take the painful steps that everybody knows that are necessary. Everybody knows what to do, they're just not doing it. I'm not asking you to take a leap of faith or even to take my word for it. You can see what is already occurring now. Now, nearly half of China's rich want to leave the country, according to a survey that was sponsored by the Bank of China. And in November and December, foreign reserves declined by $92.7 billion as China's businesses and people smuggled money out of the country. Foreigners may be optimistic about China, but the insiders, the folks who really know what is going on, are getting out. Thank you.
Thank you. And the rebuttal.
In the past 100 years, the Dow Jones, as a reflection of the economic activity in America, is up 24,000%. In 1912, there was child labor. Women couldn't vote. And there was massive inequities between the rich and the poor. There's been a depression, there's been wars, there's been recessions, but the market is still up 24,000%. In a very short period of time, China, in the past 30 years, has demonstrated significant growth. Significant growth that's never been seen before. And when you have a massive portion of the population in a direction of policies for social stability and a means to get rich, you have a sea change that's taken place since Deng Xiaoping in 1978. But there will be corrections, and there will be challenges, just like the great nation of America has experienced. There's so much talk in the past year regarding the slowdown. And I remember when I first started up a China Fund, and the negativity in the 90s, and I first went over, it was nothing but bicycles. There were no cars. And today China is the biggest consumer of cars. And last year, the cars' momentum slowed down immediately. It's all over. I've been listening to this since gold was $250, saying it would go to $1,000 in the past 10 years, that it's always over. It's always over. China has so many issues like any growing nation. And there's the key factors, as Niall Ferguson likes to characterize them, there's 6 key factors. And one of the biggest things, the challenge that I see, will be rule of law. And China must, and it's been slowly moving in that direction. But in 1998, they shifted the largest transfer of real estate from some welfare from the government to all the government workers and created a mortgage industry. And within that, now you can turn around and buy real estate, and it started to take off throughout the nation. But unlike America, you had to put down 30% for your first house, 50% for the second, and you weren't allowed to speculate on a third house. In America, in 2006, you could buy 3 condos if you wanted for 1% down. Further, the banking system never had collateralized damaged obligations, or CDOs, as they call them. And they never turn around and try to insure these products with what they call credit default swaps. They've had none of these banking issues. And what they did see was real estate take off along the coastal area, where the value and the cost was just too great. So in the past year, the past 2 years, they've done everything to slow it down. And we look at money supply as a key factor. And money supply on a year-over-year basis has been declining until last month, and all of a sudden it turned. And that money supply was growing at a 30% rate, which China had to inject into the system to sustain what was taking place as the rest of the world melted down. But America, it injected $7 trillion into the economy, and it's growing at 2.5%. And China basically injected substantially less to maintain that economic development that's necessary for their economy. They have responded, just like now they're starting to respond to the concerns that's taking place in Europe. Now, they will make mistakes, but I do not think that what I've seen now in looking at real estate prices, that this city here is the second most expensive city in the world. And a calculation people would look at was that Beijing, which is a major center of the world, in the top 10 cities in the world, that it took 30 years for you to pay off a condo if you were to buy a condo or a house. And now with the correction, it's down to 15, which is basically still less expensive than London, England, or Moscow, or New York City. So you've seen the shift, and now the repositioning so that you can start real estate, but they're very concerned about the speculation. They have done everything that has been prudent for economic development, but they will make mistakes. And just like America has gone through tremendous corrections, they still plow on to go to higher levels. And further, I hear and I listen to the manufacturing sector. The CIA says that the manufacturing sector is about 20%. That is their number, of which half is America. When you take a look at the numbers of trades, such as the iPad that you buy, only 7% of that value is really manufactured. It's assembled in China. And all the parts are coming from Japan and Taiwan and other locations, and they're assembled and then sent back here. But the total dollar value is basically shown as an unfair trade between America and China. When you start to drill down and start taking a look at what China is doing on that front, I think is quite remarkable. And just like when I take a look at Gap stores saying they're rationalizing in America and they're opening over in China because the Chinese want American products. That's what they want, and when I visit the Gap stores, they're packed with local shopping. So I do see this sort of sea change that's taking place, and I do believe it's profound and significant with this massive transit system, just like President Eisenhower, after World War II, created the interstate highway system in America, and it changed. It changed significantly. It was profound and sustainable that all of a sudden you had a Dairy Queen. You had a McDonald's, you had motels, and it just grew, and towns grew, and cities grew because the common person could move throughout the country. This is the long-term vision, and I think it's very significant. As I just end, one other key component is R&D. Last year, China became the leader in filing patents. There's a huge portion of their economy, in fact, 1.5% of their GDP is towards R&D. In talking to U.S. corporations that have to look for the technologists, the engineers and the PhDs, they've partnered and they have to go to China because there's more lawyers going through the infrastructure system in America than there are engineers. The educational system favors sports trainers than it does over engineers. The American system favors lawyers over engineers. So they have to go, and here's a country that is now putting their own satellites up and have a vision to be able to have their own infrastructure, and they're going to put people on the moon, and they're going to fast track this process. So I believe when you take a look at history, this is what America did.
Thank you very much, both of you. Thank you very much, both of you. That was awesome. And we'll get into the questions now. Just a reminder, I'm going to ask you both questions. You'll have 4.5 minutes to answer, and then a 4.5 minute rebuttal. And then the crowd is welcome or asked to submit your own questions via Twitter using the hashtag #VRICChina. And so hopefully we'll have some fun. And I'm hoping that the two of you will slug it out, and that'll make my job really easy here. So first question is to Gordon. At some point, economies always crash. They have financial crises. Things happen. This is inevitable every country around the world in history. But for prediction to matter and to be useful for investors, it has to have some element of timeliness and, when is this going to happen? Your first book, or your book, The Coming Collapse of China, was first published in 2001. So that's been 11 years without a crash. I know you reiterated it, you've reiterated your case recently, but why now? What didn't happen over the last 11 years that you expect to happen imminently?
When I wrote my book in 2001, I focused in on China's accession to the World Trade Organization. And I felt that countries would no longer be tolerant of China's mercantilist policies. And if I got anything wrong, I think that it was that the unwillingness of countries like the United States, countries in Europe, to challenge China on its trade policies. And so what I said in 2001 was that the political system and the economy would fail within a decade, which was 2011. In the foreign policy article that you just referenced, I talked about why I think that it is now. And of course, what we are seeing is a Chinese economy that is very dependent still on exports. And essentially, even though the Ministry of Commerce has been issuing these very robust export numbers, they're not compatible with what we've been seeing in the economy. So for instance, double-digit declines in air freight shipments, single-digit increases in container throughput, and declines across the board in air and sea freight rates. Also, we have seen in China factories close. We've seen owners flee because they couldn't pay their debts. And we've seen owners commit suicide, and of course, the worker protests throughout September. I think that essentially we are looking at Europe as a trigger because China is vulnerable. And also, if we start to look at some of the other things in the Chinese economy, what they did in 2008 in order to avoid the downturn was they had this flood of stimulus, about $1.1 trillion into a then $4.3 trillion economy in 2009. So of course they created growth, but they also created the dislocations and imbalances that followed, not only inflation, the stock market bubble, but worst of all, the property bubble. And right now, the banks, which were used to funnel much of this money into the economy, I think no longer will be able to use for that purpose because their balance sheets are weak in reality. So when you start to look at the flexibility of the Chinese government, I don't think that they can do it. I think that their banks are in trouble. The inflation rates are still high, much higher than what Beijing is willing to admit. They said 4.1% in December, obviously much higher than that. And so the government no longer has the flexibility to go out and stimulate the economy like they did last time. And the big difference now in 2012, which we didn't see in 2008 or 2009, is the precipitous fall in the property market, which I think is starting to cascade and therefore will give the central government more headaches. What we saw in October and November were developers in Shanghai and Beijing offer 30% discounts. We had one developer in China even said that it was selling apartments at cost. We have seen falls in sales volumes, of course, but also in governmental revenue from land sales. And the worst thing about all of this is the overbuilding. In 2010, the state grid said that there were 64.5 million apartments that showed no electricity usage for 6 consecutive months, enough housing for 200 million people. But at the same time, the central government and developers were building another 40 to 50 million more units. Really, how many more ghost cities can China build at this time to keep its economy going? They are running out of flexibility, and I don't think that they will be able to weather this coming downturn, which will be much more serious than the one in 2008.
Your response.
Well, first of all, the banks, as I mentioned earlier, require you, if you want to buy an apartment, to have 30% down. And when you compare that to what's taken place in the U.S., and you take a look at what's in the past 2 years, China's raised interest rates 6 times. And not only have they raised interest rates, the cost of money, they've also increased their reserve requirements. So the quality of the loans, and they have to have more capital set aside for any of the loans. And so having a correction of 20% or 30% is not going to unwind the banks and the devastation that's expected to take place in money center banks here or ING Bank in Europe. ING Bank, which is leveraged at 40 to 1. Chinese banks are not leveraged 40 to 1, and their capital requirements and reserves for against any type of real estate lending is substantially greater. And I think the government had a very specific policy to actually slow down what is taking place. And if you look at their plans, you can see the whole concept is to move to the interior, to go west. And super railway systems being in place that'll take another 10 years before they're finished. All this is to move things to the west, and I think that that will continue. And going through a correction, I probably think the worst is over. The most important thing I've found as a money manager is to look at money supply and the churn in the money supply. So as you've seen in the U.S., in fact, the money supply, the weekly number is above the monthly number. And every time that's taken place, the U.S. market seems to be able to sustain a wall of worry. In August, it had turned negative. Now it's basically returned itself where it's in a positive mode. And then you turn around and see China turning its money supply where you can't get weekly data, but you can get monthly data relative to 3-month data, and the trend has reversed itself. Every time we've seen that as money managers, we see a snap up in copper prices, we see a turn in gold prices, we see a turn in economic activity. So I think when I look at that, it's more key for me as a money manager. And that's why when I present it, I say I take a look at the very short term relative to the big S curve. And I still believe we are in this sort of super cycle. And there are so many naysayers on China. And I've been listening to it for 15 years. Like I mentioned this earlier, it's really interesting to watch that as soon as it has any type of a correction, or gold has a correction, everyone comes out and is negative, negative, negative. Stay tuned to this money supply growth. And if money supply around the world grew at 20% last year, what do you think this means for commodities? And then you want to go back and see if it's just going to be hyperinflation. No, you have to take a look at those countries that have programs for infrastructure building. And the multiplying effect, this multiplying effect versus the U.S. has been giving so much money and they're spending towards government bureaucrats. There's the multiplying effect that in the economy might be 4. But when you're building subway systems through 20 cities and you're building a massive infrastructure of train systems, et cetera, that multiplying effect of $1 is times 12. And I think that that is what's key and significant as China goes through this next wave.
All right, so this time the first question will go to you. So the columnist and economist Paul Krugman recently wrote this. Consider the following picture. Recent growth has relied on a huge construction boom fueled by surging real estate prices and exhibiting all the classic signs of a bubble. There was rapid growth in credit, much of that growth taking place not through traditional banking, but rather through unregulated shadow banking, neither subject to government supervision nor backed by government guarantees. Now, because of the context here, we all know what he was talking about, but the idea was that could sound like the U.S. in 2005, 2006, 2007, or Japan a couple of decades earlier. And so the question for the bulls on China is, why is it different this time? Or why do you feel comfortable with the it's different this time logic?
So it's a great question on this shadow banking. I know I sent over one of our analysts who went to Fudan University in Shanghai. And he went to the cities where it's most reported, the shadow banking. And a big part was the government basically trying to crack down along the coast in particular, on these cities and what was taking place from banking to stop the speculation that's taking place. And with that, people went out to borrow from anyone they could borrow to maintain their business. And this became the cry throughout the nation, as according to everything in New York City and coming out of the media. Our analysts didn't find that. They found that the shadow banking was actually small in the context, and it's much more important to follow Alibaba, which is a company that does all the sort of intellectual capital, the airport hub for all these small manufacturers. And they will organize the product to be sold in the world and manufactured, just like Li Feng does for retail business. They do it in Hong Kong, and it's important to track those two companies if you really want to follow small manufacturers in China and how stressed are they. So when we did this research, the stress was really, really localized, and it was greatly expanded, like I showed a slide yesterday that CLSA, or a bank credit analyst showed, sort of a parabolic story on negativity that's taken place in China. The other part that's important is that there have been a lot of protests throughout China. And what's interesting about the protests are not a march on Wall Street. There's not a protest of that element. It's local inequalities, and there's local corruption. And with that, it's basically, it's elevated to the central government. And if they could turn around and find out that some local communist person has been corrupt, they go after them. And so that's an important part to recognize, but it makes it sound like there's massive marches of 1 million people marching on Wall Street, etc. It's not, but people feel the freedom to be able to go out and make their protests. And there's been lots of issues. Some have been beaten, just like we saw in Portland, where some people were beaten back by police, etc. But the dimensions of how it's characterized in China is so different than how it's characterized in America.
Your response on the shadow banking real estate question.
Well, Frank, I don't think you answered the question. In shadow banking, the real problem is the big four banks. At the end of Q3 2011, the China Banking Regulatory Commission said that the non-performing loan ratio for the banks was 0.9%. But when you talk to the rating agencies, they're talking probably 10% non-performing loan ratio, and some a little bit higher than that. What the real problem is that you have what we call shadow banking, a number of banks that have been putting their most risky loans and most risky assets off their balance sheets by using trust products of really dubious legality. And so essentially, even if one were to assume that China's NPL ratio is indeed correct, it doesn't account for an enormous amount of loans that are off the balance sheets of the banks. And at this point, we don't know what they are, but they are enough to cause concern, because we saw the same thing in the United States and in other developed countries where risky assets were put off the balance sheets. The reason why this is going to be a problem is because although a lot of these loans are off the balance sheets, when you look at them, nonetheless, most analysts believe that the banks in China are still responsible for the repayment of these of the loans. And so, not the banks, but that the banks still retain liability on the loans because of informal arrangements. This is going to be a serious issue going forward, and it makes all of the banking statistics suspect. Although this is not shadow banking, Frank did talk about protests. I think that we need to talk a little bit more in detail. In 2010, the last year for which we have statistics, there were somewhere between 180,000 to 280,000 mass incidents in China. That's up from about 70 to 80,000 about a half decade ago. What is of real concern, of course, is not the number of protests in China, but their increasing violence. Because we're not only seeing strikes and demonstrations, we're seeing riots, insurrections, and bombings across the country. I mean, we're not talking about the political system today, but nonetheless, that does have an effect on the economy at some point. And so therefore, what we're seeing is a society of the Communist Party increasingly repressive for the last 7 or 8 years, not able to mediate conflict. And that is a problem because we see this conflict arising not only among minority groups, workers, Christians, house advocates, all sorts of groups in society, Most people believe that a one-party system is no longer appropriate for China's modernizing society, and the Communist Party stays in power because of its use of coercion, but only because of its use of coercion. This is an increasingly insecure leadership, and of course, this will have an effect on the Chinese economy.
Thank you. Now we're going to, I see one question so far from the Twitter sphere. Again, you can still ask them at hashtag #VRICChina. I think this one is best to you, Frank. And the question is, so China is the largest holder of U.S. government debt. If the U.S. dollar were to be replaced as the reserve currency, or if something were to happen to the U.S. dollar status, how much of a risk does that pose to China?
I think that there's always that risk, and you're seeing change just recently last quarter. China has opened up negotiations and trade with new agreements with Japan, and they will trade their currency and not just go through the dollar. The dollar has always been in the currency of trade, and so rather than going through the dollar to go back and forth, they're dealing directly with each other. And I think that you're seeing a witness in this past year, the past 2 years, over 500 acquisitions of China throughout the world in acquiring resources. And I think that that will continue, as that's how they're going to best diversify. They can't turn around and dump their dollars, but I think the program, the percentage of rolling over into dollars is being diversified into acquisitions and building up relationships in other places of the world, in particular what you see in Africa.
And do you have a comment on the same issue?
Yeah. I think Frank rightly talks about the hype. One of the biggest issues in China that is hyped is the internationalization of the renminbi. You can't have a reserve currency unless it's convertible, and the renminbi is not convertible on the capital account. And although Beijing is trying to internationalize the use of its currency through the mechanisms that Frank talked about, we're still a long way from that. The United States is doing a lot to destroy its own currency, but nonetheless, it is durable. And the reason it is because it is the only unit in the world that can serve as a reserve currency at this point, because the United States is willing to put its currency out into the world. In other words, to have a reserve currency, you have to run trade deficits so that other countries can hold your currency. China's not willing to do that. And until China is willing to make its currency convertible, and until China is willing to is able to convince the world that it will have a stable monetary policy, the dollar, the greenback, you're stuck with it.
Well, I think there's another part to that, is that the differences in trade. China, most of their GDP is domestic. It's not foreign, like the U.S. is more of a global currency. And one of the big parts is that as the price of oil has risen, then naturally the U.S. had to have a deficit because of the reserve currency, because they're sending money out. They're sending money out for trade for oil around the world. That's just a common, simple math in the marketplace, and it gets distorted. But America is that currency for the world because it does trade around the world. That's the big difference that you see in that sort of trade balance. Most of the money, if you take a look at the economic GDP growth, it's been infrastructure, it's been FDI, foreign direct investment, it's been everything to fix direct investments to build out that economy. And that has had the biggest multiplying effect. And any type of economist will tell you, it doesn't matter if they're from Austria or they're Keynesians, they're going to tell you the multiplying effect of construction for $1 is a multiple that can go up to 16 times. And when you have a country that has huge direction towards infrastructure building, you get this multiplicity that's shown a way to create jobs in a marketplace.
And I think right now there are no more Twitter questions, so I'll go back to one of mine. This one is to Gordon. So in 2008, when the global economy went bust, Beijing obviously stepped on the gas pedal quite a bit, basically avoided the crisis that everyone else did. They avoided the mass unemployment and so on. They did very well. Now people are less concerned about a global financial crisis, although Europe is still an issue, and more about the domestic Chinese banks and so on. But supposing even the non-performing loans do add up and the banks run into trouble, what's preventing Beijing this time from doing the same thing, making sure that they keep the level of investment high enough so that there aren't broad economic ramifications?
There's a number of limitations on China. First of all, one of them is just inflation. If you go back in 2008, when the global downturn, inflation was low enough so that it was not a factor. These days, although Beijing said inflation was 4.1% in December, it's probably twice that. And even more critically, food inflation is somewhere between 12 and 15%. So they just can't blow up the money supply like they did last time. Got to remember that China's money supply at the end of December was 28.4% larger than America's, even though the American economy is more than twice the size of China's. I mean, how much more can they blow up the money supply? And even if they do, what effect will it have? What we have seen in China is that now it takes about $7 of investment to create $1 of gross domestic product. That is extremely inefficient. And of course, yes, they can spend some more money, but we have to go back to the whole issue of the banks and shadow banking. And in addition, you start to look at some of these other things when you have, for instance, the housing bubble starting to collapse, you have the inflation, and you still have the stock market bubble that is yet to be unwound safely. So yes, China has some ability to go out and spend more money, but they are now restricted because in 2008, yes, they avoided the downturn, but they did create the dislocations and imbalances that they now have to deal with. So instead of dealing with lower growth, they now have to deal with the consequences of their last stimulus program, which probably by any measure was the largest in history. That is the restriction on China's leaders these days. And if you look at what they've been doing over the last 3 or 4 months in this downturn, which started at the end of September, they haven't done very much. In 2008, Chinese leaders acted very quickly, starting at the end of July with their Politburo meeting and their stimulus plan in November 2008. This time, when the signs of a downturn are unmistakable, Chinese leaders have done very, very little. The only thing they did was they dropped the bank reserve ratio requirement a little bit. This is a sign that the Chinese leaders are not in a position to do anything because they are constrained by the problems they created before. Plus, also they've got the political transition where leaders like Wen Jiabao, the premier, who is China's chief economic officer, is sort of on his way out. And so he is not dealing with these very important issues. He wants to hand them over to somebody else. This is the problem of a political system in paralysis or semi-paralysis. So you put all these factors together, and they are real restrictions on the ability of the Chinese system to deal with the gathering downturn, which we have seen since September to be increasingly serious.
So what do you think, Gordon, the shadow banking, how big is it? Do you think it's going to unravel? Do you think it's 50% of all banking loans? Do you think everything's off the balance sheet? Is that what you think?
No, I mean, it's
give
obviously...
Give me a number. You asked me, said I didn't answer the question earlier. You give me the number.
I think that you probably are going to see something on the order of 20, maybe 20% of the loans that are on the balance sheet are actually not on the balance sheet. And that is really just sort of anecdotal evidence from what you can see from where the shadow banking system is most important, which is, of course, in the coastal areas. The issue here is going to be how big the money supply is, and is it much larger than you'd expect it to be? And because it is so large, it means that there are a lot of loans that are not accounted for to the China Banking Regulatory Commission. But, you know, Frank, you know, you're absolutely right.
So what happens if it's 5%? What happens if it's 5%? What does that mean? Does it mean still China's going to implode and fall off a cliff?
I think that what it means is that essentially the banks will not be able to do what they did in 2008, 2009, and 2010, which is to be the conduit for the central government stimulus program, because the bank balance sheets are weak. And so therefore, it undermines China's ability to deliver high growth like they did in 2008. So, you know, as I said, maybe somewhere about 20% of the declared loans, maybe smaller, maybe bigger, but nonetheless, I think that it is inhibiting their ability to be the conduit for stimulus money.
Well, my math is slightly different. My math is, in 2008, America already had about $15 trillion in debt. And they turned around and injected $7 trillion to get a 2.5% growth rate. China had over $4 trillion in cash, and they put a little over $1 trillion in to basically make sure they don't go through a recession. They still have, how much money do they have on their balance sheet? How much cash does China net have today?
Probably very little because, Frank,
How
although
much
they're
money do they have?
$3.2 trillion,
They have no money, you're saying?
they have very little in terms of cash because they don't have 3.2 trillion of unrestricted cash. You have to remember that the central bank went out into the Chinese markets by issuing renminbi denominated debt in order to buy that foreign exchange. You know, exporters and people just didn't turn over their foreign exchange to the central bank. The central bank had to buy it. In order to buy it, the central bank issued debt. So yes, they've got $3.2 trillion of foreign currency on their books, but they also have something close to $3.2 trillion of debt also on the books of the central bank. And that's why the central bank is insolvent at this point.
So they're so they're insolvent, but the Federal Reserve isn't, and neither is the EU.
This is not about the United States. I mean, this is about
Well, it's all
China.
about the United States. You bet it is.
Well, I'm not talking about the coming collapse of the United States. The problem is that China doesn't have the resources to do what it did 3 years ago in order to rescue the economy.
I see.
Let's switch it up and go back. There's a question from Twitter, and it's one that we have to address here. To Frank, well, we'll start with what do you make of the demographic argument? This is something that Gordon brought up. People have talked about it for a long time. Some stats that I looked up before I got here. In 2000, just 10% of the population was age 60 or over. Now that's already up to 13%. The total population that's between 20 and 24 is declining, not just as a percentage of the population, but actually in a real hard decline. What is your counter to that? Because we hear demographics is destiny. If demographics is destiny and China's look so bad, how can we be optimistic about it?
In a scheme of looking at the rest of the world, if you're looking for the youth, and the most youth you're going to find is India. And China's, the percentage that's youth, I don't think that's way out of whack relative to most of Europe. If you look at percentages, if you look at Greece, you want to look at Italy, you want to look at France, you want to look at even the U.S. on a relative basis. So I'm not bearish at this stage, and I'm not going to think out in 20 years from now, because how many people are thinking about what their planning is in 20 years? And it's sort of this forecasting out for 34 years that I see. It's important to take an idea of what can be, but the important part to me as a money manager is what's going to happen over the next 1 to 3 years. What's on the program? What's the project? And when you look at China, they have 5-year updated programs of where they're going to spend their money, and they have to focus on where do they have the demographics. They have a lot of young people still that are migrating from the rural area to the urban area, and they have to put to work. That's a key factor, so I think the policies are to create jobs for that youth.
But you don't have to project out 30 years to see the problem. Sometime between 2013 and 2016, the absolute size of the Chinese workforce will level off and then start to decline. For the country as a whole, the year is 2025, maybe 2020. China is going to get old well before it gets rich, because you're going to have one worker support 2 parents and 4 grandparents. China has one of the worst demographic profiles of any major nation. You mentioned India, and I think that it's important to sort of give the comparison if you want to do that. And that is that by the middle of this century, India will have something like 500 million more people than China. It may have 600 million more people than China, but more significantly, India will have a workforce that is about double the size of China's. The problem with China is the one-child policy, which has created this skewed demographic profile, because you've had a number of very adverse circumstances. And yet, we want to talk about China's potential. The one-child policy, you talk to any Chinese demographer in private, they'll tell you that the policy is ludicrous because China's getting smaller. The problem, or will get smaller very soon. The problem is the Communist Party demands the one-child policy because it needs to control China's people. And so therefore it maintains a really disadvantageous population policy because of its insecure political status. But if you want to put it into the economy in recent terms, you can see that demographics really propelled the Chinese economy during the reform era because of the demographic dividend. This was enormous increase in the workforce, which allowed China really to make a number of reforms, but also to do very, very well. Well, that's turning around within a year or two. And that's really going to be the problem, because then Chinese leaders are then going to have to succeed despite collapsing demographics. You know, I don't believe that demography is destiny, but I also do believe that demography is very important, and it sets the limits for what is possible. And if you want to talk about what's possible in terms of consumption and all the other important things for the Chinese economy, demography is working against China's leaders.
I strongly disagree that it's because of politics that manipulate and control the Communist Party. It's because they have a heart, and they recognize just the math many years ago when they went to one-child policy, how they're going to feed all these mouths. First of all, was to create an economic growth profile. And I think at the time, now that you can turn around, you can have 2 children, you have to be an economic ability to be able to support that. You pay a tax for that. And then eventually that will remove itself. That's what China's shown its ability to adapt. Why would you want, if you're one of the poorest nations in the world, to turn around and let people have many, many children and see them starve? I think those political leaders had a heart.
Political leaders don't have a heart when the one-child policy results in forced abortions and the killing of live children and the selling of the second children. This is horrific policy. And although at one point in China's history this might have made some sense economically, it certainly doesn't make sense now. But in terms of the human rights issue, it is certainly very corrosive. And it's one of the reasons why China is so unstable, because the Chinese people hate this policy. But whatever you think about human rights, even if you don't care about it at all, how can you support a one-child policy at this point when China is going to have one of the worst demographic profiles of any major nation? It doesn't make sense.
All right, well, we're just about out of time, so we have we're gonna 2.5-minute closing statements from both of them. Thanks a lot, by the way. And we'll start with you, Frank, 2.5 minutes.
I'm a big believer that you're still in this massive super cycle, and within that, there'll be tremendous volatility. I have been publishing that the world is not coming to an end, and I've been publishing and showing that I put my money where my mouth is, and I have to make economic bets for investors at all times. To prophesize where the world's going to be straight, linear, up or down is not my job. My job is to try to understand socioeconomic, political factors, and to see where growth is and what those policies and adapt to that change. And what I do see by every time I go back to China and I go to other countries like India, there's this tremendous emotional hope. There's hope. And Dominic de Moises wrote a book called The Geopolitics of Emotions. And he said when you're traveling around the world, you have to look at people, not just facts and numbers, etc., but where's their heart? Is there hope? And when I go to China, and I go to India, and I go to Africa, I see hope. And many other countries, I see nothing but fear. And when you have hope and fear, the worst is humiliation, as you call it, in those collective emotions. When you have humiliation as a people or as a group, that is where you get terrorists from. And so it's important to take a look at these countries, and where we invest is, and the key factor is their hope. And I have hope. I have been seeing since my high school, when I grew up in Toronto, that 30% of my high school, which is the oldest high school in Canada, it's over 200 years old, 30% was Asian. So we had the smallest basketball team, as a joke. But we won the national ping pong championship in all the maths. And what is important was to see how many people were coming from Asia, going to school, and now Toronto had one Chinatown and now has 4 Chinatowns. And to witness to see how many of my friends have gone back to China. And then I've employed people and trained them to get their CFA, and they have gone back to Asia and gone back to China. And they're taking that dream back with them. So I have much more optimism. I just have it. I'm sorry, but I do, and I'm going to bet on it.
Gordon, your closing statement?
The fact, let's get beyond generalities here. The fact is that most Chinese have left China in the last 30 years and have decided to stay in Australia, in Canada, and the United States. The migration of people, I think, is very important, and especially what we're seeing, the signs of China's rich wanting to leave the country as well. But let's put that aside for a moment. I think to understand where China's going, it would help to have a little historical perspective. So in 2 minutes, I'm going to give you a history of the world in the last 4 decades, and I'm going to do all of it through the lens of my life. I graduated college in 1973. The year is significant because that's the time of the Arab oil embargo. And when I got out of school, I knew I was going to be working for some Arab and sheikh for the rest of my life. Let's fast forward to the end of the 1980s. I was practicing law in Hong Kong, and all my partners did work for Tokyo banks, and everyone was caught up in the craze. Everybody thought the Japanese were going to take over the world. And there's a lot of evidence to suggest that they would. The Emperor's Imperial Palace, not even 250 acres, was worth more than all the real estate in California. Land in Japan in 1990 was worth 50% more than the remainder of the planet. The value of stocks listed in Tokyo exceeded the combined values of all the shares listed in New York, Paris, Frankfurt, London, and Toronto. All of the world's 10 largest banks were Japanese, as were its 4 largest securities houses. Everyone talked about the Japanese century. I wasn't interested in geopolitics then, but I just knew that the Japanese would falter. Now we're seeing this same hysteria that we had about the Arabs and the Japanese, but this time it's a different cast of characters. It's the Chinese. Well, ladies and gentlemen, let me assure you that the Chinese will not be able to do what the Arabs and the Japanese could not. China has indeed not repealed the laws of gravity or of economics, and China will not be the first developing nation to get on without a major financial crisis. And yes, the Chinese economy will eventually have to pay for grossly wasteful investment, runaway corruption, a deteriorated environment, a crushing debt load. I believe that what we're seeing today is not just merely a downturn, but it is a historic change in the Chinese economy. Thank you.
Thanks a lot. Thanks to both of you for joining, and thanks to everyone for coming and listening.